All right, first up, a look at the Asian markets. They are mixed as we speak, and this despite a strong handover coming in from Wall Street on hopes that the US and China could perhaps strike a trade deal soon. That news boosted sentiment across Wall Street, as a result of which we saw Japanese index trade higher. Trump also said that US and Japan have reached an initial trade agreement, so that's weighing itself on the Nikkei, which is higher by almost 0.4%. The Korean index should come up for you on your screen. Along with that, we have the Straits as well as the Taiwanese indices as well. The Korean index outperforming the Nikkei with a gain of about 0.6%. Mild gain seen for the Singapore index, while the Taiwanese index higher by almost 0.5% as well. So amid more green in the Asian screen as against what we saw at the open, we have the SGX Nifty, which is indicating a start closer to the 11,500 mark. A 20-point bump up is what is on the cards at the beginning.
All right, let's talk about the U.S. markets. On Wall Street, stocks jumped after President Donald Trump said a U.S.-China trade deal could arrive sooner than expected. Investors also monitored developments around the congressional impeachment inquiry against Trump, as well as weakening global economic data. The Dow Jones closed 160 points higher. The S&P gained over 0.5%, while the Nasdaq outperformed to end 1% higher in trade. In terms of economic data, U.S. August home sales rose 7.1%, which came in stronger than what was expected. CNBC's Eric Shemi gets us a wrap of all that happened on the Wall Street.
U.S. stocks rebounding from yesterday's sell-off, the Dow adding 162 points, the S&P up 18, and the Nasdaq higher by 83. The high pace of turnover in the C-suite continues, with WeWork, Juul, and eBay leaders all stepping down within the last 24 hours. WeWork's CEO left yesterday amidst an uproar over the company's governance, while both Juul and eBay CEOs stepped down earlier today. The CEO turnover rate hit an all-time high in August, with 159 CEOs leaving their posts. This is Philip Morris and Altria call off merger talks. The talks ending as Altria's investments in vaping and cannabis, including e-cigarette company Juul, are being dragged down by regulatory challenges. The combined company would have been a $200 billion behemoth, but now the companies say they'll focus on jointly launching IQOS, a heated tobacco product in the United States. Sales of new single-family homes rebounding more than expected in August, rising by over 7% versus the 3.5% economists had predicted. It was just the second time since 2007 that sales rose above 700,000 units, the latest sign that the struggling housing market is getting a lift from lower mortgage rates. That's the action from the U.S. market. Back to you in Mumbai.
All right, on that note, let's also hear out some opinion coming in from experts on the growth concerns in the U.S. and the impact of Trump's impeachment inquiry.
Growth has slowed. I would argue the slowdown in the U.S. is, pretty broad-based. It's been going on for a year and a half, depending on how you measure it. And equities, are essentially where they were at the beginning of January in 2018. So you have a market that's kind of flat. Sure, it took some spills in the middle. Many people would argue that the signals are pretty mixed. What I would point out is that if you look at the number one indicator of where the U.S. is at, it's the labor market.
I think, why does all this matter? This all matters to the extent that it affects policy uncertainty and how that policy uncertainty feeds back into the outlook and to market uncertainty. Now, there are times in the past where you could say market uncertainty has actually very little bearing on the outlook and on markets. In fact, 2018 is a good example. Heightened policy uncertainty in the United States, no clear indication that the outlook was affected by it or markets even cared about it. That's different today. So there's evidence that, as the ebbs and flows of the trade war have gone on, it's increasingly feeding back, not just in terms of the outlook and the drag on spending and hiring, but also in terms of market uncertainty ebbing and flowing right along with it.
All right, let's move on to a CNBC exclusive. St. Louis Fed President James Bullard says the Fed still has a little more to go with rate cuts. Remember, he was one of the 3 voting members on the Federal Open Market Committee to dissent from last week's decision to cut lending rates by 25 basis points. He also says trade is the most serious threat to global economy. Listen in.
It's prudent risk management at this juncture to take account of the downside risks to the U.S. economy. Even though the economy overall is performing relatively well, we've got an ongoing trade war in a slowing global economy. We've got manufacturing down. So I think it would have been better to go a little farther at this last meeting than the majority of the committee wanted to go. But still, I would say the committee overall has made major changes during 2019. Coming into 2019, we were expected to raise rates, actually. In the January, February, March timeframe, we went to a flat path, and then in the July, August, September timeframe, we've actually lowered the rates some. So we've made a big move. I think we could do a little bit more. We've still got an inverted yield curve here. The policy rate is still above the 10-year. So I think we probably have a little bit more to go here.
The pushback I would give, President Bullard, is that we've got a good economy here as well. I mean, even housing has really started to wake up as a result of those low mortgage rates, some signs of stabilization in manufacturing, some firming in inflation. I mean, those were some of the weak spots in a market that is less than 2% from record highs. So why double down on the accommodation?
Yeah, I think some of those effects are exactly what you'd expect from the turnaround in monetary policy during 2019, housing in particular with lower mortgage rates. That's just the kind of thing that you'd expect. Monetary policy acts with long and variable lags, as Milton Friedman taught us. So I would expect the effects to show up now in the second half of 2019 and in the first half of 2020.
Does the fact that the word insurance cut has been used by you in recent speeches and by the Fed chair suggest that the data isn't that bad yet? It doesn't actually warrant a 50 basis point cut yet, but you think it's going to get worse in the short term?
Yeah, I think this is all about risk management and about the downside risks to the economy. If the economy powers through here as it did in the late 90s, then we can raise the policy rate back up. But I think the prudent thing to do right now, especially since inflation's below target, inflation expectations below target, I think the prudent thing to do is lower the policy rate now, and then if all is well next year, we can come back and go back to the previous level we were at.
All right, and across the Atlantic, European markets, they closed lower as political events in the US and the UK weighed on sentiment. But stocks came off the lows towards the end of trade on the back of Trump's hint of fresh hopes for a trade deal between the US and China. It will be very interesting to see how the European markets pan out in today's trading session, as they did not get the full impact of the trade optimism that played out on Wall Street yesterday. The European markets shut just shy of that. We had the CAC, which was underperforming with a cut of about 0.8%. But it's Brexit uncertainty that continues to cloud the markets. UK Prime Minister Boris Johnson was dealt a serious defeat after Britain's Supreme Court ruled his decision to suspend Parliament was unlawful. Johnson disagreed with the verdict and said he would take the UK out of the EU by October 31st deadline. CNBC's Matthew Taylor reports on the latest developments on Brexit. Matthew.
But it was indeed a fiery affair as, of course, Parliament resumed following that Supreme Court decision earlier on in this week. Boris Johnson cutting his trip to the United States short after the Supreme Court found that the proroguing of Parliament was unlawful. But essentially, we remain in the same position we were in prior to Parliament being suspended. There's no sign of an election, and the future of Brexit really hangs on whether a deal can now be struck with the EU on the 17th and 18th of October for an exit on the 31st of October. Boris Johnson has said he's still not going to flinch when it comes to that October 31 deadline. But it was interesting because parliamentarians had the opportunity to call a vote of no confidence in the government and really trigger an early election. We know that the opposition has been wanting that but has failed to pull the trigger on that. The Attorney General's words, Jeff Cox in the chamber, were perhaps the most biting, saying that the Parliament was dead and should not be sitting. Boris Johnson continuing to face calls to resign, though, goading the opposition and also some of the other minor parties into calling that vote of no confidence and bringing on an election. Take a look.
If in fact the party opposite does not have confidence in the government, they will have a chance to prove it. They have until the House rises. Let them listen. I think they should listen to this, Mr. Speaker. They have until the House rises today to table a motion of no confidence in the government. can have that vote tomorrow. Or if any of the other parties, the smaller parties, fancy a go, they can table that motion and we'll give you the time for a vote.
So there was no motion filed when it came to that no confidence. We'll wait and see what happens later on today.
All right, that's what's happening across the Atlantic, but let's talk about the currency space then. Dollar index holds firm, rising to above the 98 mark. The US currency is supported by President Donald Trump's hints of progress towards a trade deal with China soon. The greenback also held gains on the euro and the pound.
In the world of commodities, crude oil prices slide further, logging a second straight day of losses after US crude inventories unexpectedly rose on worries that a demand could fall after US President Donald Trump's comments about trade talks with China.
All right, let's take a quick break then.